Hello. Welcome to the HR European Market Neutral monthly video update for May 2022. I'm Paul Marriage from Tellworth Investments. This was a pretty horrible month for markets overall. We saw a big drawdown at the beginning of the month and then a steady recovery. The drawdown at the beginning of the month was really around macroeconomic concerns more than perhaps the Ukraine themes that had dominated earlier in the year, but clearly energy prices, oil prices, food shortages are all there, and they're all consequences of that crisis to greater or lesser degree. But they really drove markets down on that concern about how the rest of 2022 is going to pan out and whether we're going to see a big recession in Q4. As the month progressed, there's a little bit of a rally across markets. I think more just we've gone down far enough type rally rather than anything too fundamental. I think in the UK we saw a little bit more people first green shoots of people looking through the worst bits of consumer sentiment and saying actually some of these companies are okay and are going to be here next year and the year after, and some of those valuations are a bit too low. So that's been quite an interesting thematic for us to grapple with. And overall, it was a month where our UK investments fell a little bit better than our European ones. I think a choppier, more volatile, perhaps a slightly more crowded market in Europe, something we've seen for a while. It does make it more of a challenge there for us. Our UK strategy has proved a little bit better overall. It was a flat month with the UK making a little bit of money and the European portion losing a little bit. So few highlights, to be honest. Stock-wise, it was one of those give-take kind of months where you made a bit of money here and you gave it back there, and net it was pretty flat, as I said. We were pleased to see good results from Serco, which is a decent long for us, and a company that's got back into a pretty good meet and beat type trajectory on earnings after quite a long period of being out of favour as a PLC. We also did well in our energy stocks again, so Total was a good one for us. And we had a couple of good shorts in real estate, for example. But things like the retail and consumer shorts weren't as strong this month for us. And there are a couple of names like Alstom, which squeezed a bit on us. So a mixed bag. Overall result was fair and reasonable. But I don't think a month that we'll look back on. And we're pleased really to have protected capital, because I think there were some pretty ugly moments, particularly early in the month. I guess looking forward for us, the most important thing will be, how the summer pans out. The UK consumer is proving pretty resilient so far, I think, particularly offline. Online has been tough, but offline, retail, pub companies, restaurants and things seem to be doing a little bit better than we thought. So far, it's early days. Clearly, we've just had a big bank holiday in the UK, which will be a good test of consumer sentiment. I think also we've seen cyclicals generally report a bit better, and this theme of actually we're doing okay, we're not seeing a recession yet in cyclicals, is doing better for those stocks that have been pretty battered. So battered cyclical stocks have had a good run this month. And conversely, some of the richly rated places to hide, like Aspirex, Sarco, have been weaker. So some of those big decisions, I think, for Q3 and Q4 just beginning to play out, which is kind of as we expect, because we know that markets look forward a lot. And if we are going to get through the year without as heavy a recession as the doom sayers are forecasting, then we'll probably start to see some of those benefits now. So I think we have to be quite careful with markets going through the summer. I think that we have seen a bit of a rally that could continue a bit, but equally we are likely to see some pretty bad macro prints in the mix too. So kind of all up in the air, more of the same, I guess. We've got to be very diligent, very balanced, but I think we've got to look hard for the long winners from here. I think they're more likely to make a bigger contribution than short winners individually. At a stock level, I think shorts by the indices probably still have a good role to play for us. But I would hope that we can find more individual stock long winners, particularly as we proceed through the summer. So thanks again for your support. I hope you have a great summer if your summer holidays are beginning or you're beginning to think about them like I am. And we will keep the team working hard and finding some good ideas, hopefully, to keep the momentum going this year. Thank you and goodbye.